Let me also bring on board Deepan Mehta into the conversation. He's director at Elixir Equities. Deepan, great having you. Let me first start off by understanding from you whether the NBFC space, where there's been a bit of a cleanup with regard to microfinance, there's also been a bit of a cleanup or things improving with regard to MSME, unsecured also getting better. Is this a space that you're tracking closely? Could this likely lead to some bit of upsides on some of these kinds of lenders, both banks as well as NBFCs?
Yeah, first of all, good afternoon and thank you
Good
for having
afternoon.
me on your show. I think that for investors who want to buy lenders, NBFC is a great segment within the bank NBFC space to be overweight in. And a lot of NBFCs now have cleaned up their books. They are focusing on the right products, and whatever the NPAs they had are well behind them. Look at the turnaround which we have seen in Piramal Finance itself, and that's true for many other NBFCs, M&M Finance as well as L&T Finance. So we're very positive on the segment. And one, of course, go for the largest company, that is Bajaj Finance. But across the board, I think the prospects seem to be good. Our preference is for NBFCs which are doing multi-product, means not just housing or automobile loans or microfinance or gold loan, but someone who does almost all the products and have an equal and fair distribution. So two companies come to mind over there, three companies, Bajaj Finance, Chola, and L&T Finance. And as a matter of disclosure, we have investments in all these three companies. I think their business model is superior and little less risk because of product profile.
Mm. And I wonder, Deepan, where do you sit at in this entire debate with regard to IT and AI? Can some of the IT stocks or traditional IT companies catch up with all the developments that are playing out?
Yeah, I think that per se,
Deepan, that's for you.
yeah, there is some background noise, so I'm not able to hear you.
Okay. Deepan, we'll just resolve that for you in just a minute or two. Okay, so that's at least how it's playing out. Kunal, I wonder how you're looking at the index today. We were up nearly 3% on the IT index. We've slipped 1.5% from the highs. Uh, any indications you're getting from the kind of moves that we've seen today?
Yeah, I think the start, of course, was on a stronger note for our markets. But again, I think like what we've been seeing over the last many days, there is a room for the index to come back into the selling pressure. We saw that happening again. Mix of large cap names today. You have additional selling which has come back into the likes of HDFC Bank from the large cap front. Reliance, I think the last I had seen that stock has also drifted back into the red. So many of these large cap names X of IT index are actually one of the major concerns for the markets because there is no major kind of a lift off into these stock prices, and every minor rally, minor gap up for these stock prices is actually taken as an opportunity to try and maybe exit few longs. The concern for the index back again is that we are retesting that low of 25,350-400 from where we bounced off yesterday. Now, if that level is broken, this could be the third or the fourth attempt for the index to break below those levels. And that I believe could be a concern for the Nifty over the near term. The positive side, however, for the markets today is that the VIX has not risen up. So in the last, I think, 2-3 days, we'd seen the India VIX moving towards 14 and a half levels. We've now dropped by almost 100 basis point over there. And now we are settling on the 13 and a half to 14 range for the India VIX. So maybe that could be a positive, that at least the move may not be very volatile till the time the India VIX trades below the 14 mark.
Okay, that's the observation and the connect from the India VIX to our markets. Let's take a very quick break on that note. When we come back, we'll continue our discussion with Deepan Mehta as well as Kunal Bothra.
NBFC Securities, Kunal Bothra, of course, with us, Deepan as well. Nagaraj, let me quickly ask you with regard to a view on some of the solar exporters, because you're seeing clear visible pressure on some of those stocks, a Premier, a Vari, even the likes of Vikram Solar are under pressure. How do these look on charts? A quick trade, if at all, any?
Hi, yeah, after the announcement of tariff on these front, I think these stocks have declined sharply after moving into a consolidation pattern. If you look at Wari Premier, I think more weakness is likely in the short term. The overall chart pattern is not that great right at this point of time.
Okay, Deepan, your take on this? You know, some of these stocks have really taken a tumble. Opportunity to buy, you reckon? In fact, when we spoke to Vari earlier today, he suggested that there's not going to be as much of an impact and that supply chains can kind of shield them from any impact with regard to this tariff. You believe this is a good time to probably nibble in?
Yeah, well, we've been very positive on all solar equipment manufacturing companies, and certainly that call is not proving right so far. But I think if you have a longer term view and are prepared to ride out some amount of softness because of competitive pressure, this is a nice, sustainable, compounding industry and can deliver good returns. This 126% custom duty, which has been imposed, will not impact India's solar equipment industry to any major extent, even Vari included, because they already have their unit in USA, which is manufacturing solar modules, and management has gone on record to state that they can source these solar cells from anywhere in the world. So in a way, it is an advantage for Vari Energy because they already have a manufacturing plant in USA and they can do further backward integration over there as well. And from point of the rest of the industry, I think there is a lot of market outside of US as well. So I'm positive on the sector, but look, the market has really been very severe on these companies, and valuations certainly are very attractive levels. Having said that, we have an investment in few of these companies, so our views could be biased.
Okay, that's Vikram Solar, MV Photo, and Bari as well. They're all under pressure as we speak. In fact, we did speak with Deepak Parikh from Bharti Energies earlier today, and given that the United States has imposed that steep prelim duty of 126% on solar imports from India, Abhishek Parikh of Bharti Energies does believe that it will have limited impact on them, maintaining their guidance.
We have 1.6 gigawatt manufacturing facility in US already, 1 gigawatt acquired last year, and another 1.6 gigawatt under build-up. So our total capacity in US 4.2 gigawatt is strong enough for our entire US supplies. So of course, the US local manufacturing always insulates us from any form of tariff imposed on any sort of import in the US, naturally, number one. Number two, even when we export from India, since our supply chains are very versatile and very much, I would say, distributed all across the world, including supply chain from now Middle East, with our polysilicon manufacturing starting up in the Middle East market, and our other supply chains from African markets and from European markets where we source our sales as well. This again insulates us from these kind of duty scenarios. We stand firm on our guidance. In fact, considering the performance of 9 months this year, we are certainly looking forward to surprise the guidance. The same statement remains firm even today.
Okay, that's the soundbite coming in from the Bharti Energies management. Also looking at some of the other drags today, and there's of course Eternal, which we've been discussing. 250 is what the stock has breached now. There's Bharti, which is also lower by about 1.7%. SBI is down about 2% today. And then Reliance Industries has seen some stark underperformance. That's also struggling around that 1400 level. Deepan, you track Reliance pretty carefully. What explains this underperformance?
I think I have a different view, and that is that it is slowly going to become a holding company. The kind of feedback we are getting is that Jio is going to be like IPO is going to come, and then that will be followed by Reliance Retail as well. And investors certainly, are not comfortable with that kind of a scenario. We would have preferred a vertical split of the company and given free shares to all the shareholders, but doesn't seem to be so. And right now, I think in its present form, Reliance becomes a highly complicated company because it has multiple investment themes, all of which may not resonate with the investor. For example, I like Jio, and if I want to buy only Reliance Jio, then that option is not available to me. I'm forced to buy Reliance Retail and the oil to chemical business and some of the renewable energy businesses that they're getting into as well. So from that point of view, I think some reorganization is required. Till that point of time, I think the company's performance, stock performance may remain a bit subdued. But look, I think it's a great company, and at some point of time, it will get into very attractive valuations. And management knows best how to unlock the value. We just would have preferred a vertical split of the company into different divisions.
On the charts, though, is sub 1400 a good buying opportunity?
Yeah, I think it now becomes a stock which I think you try and buy. If you're looking to shield your portfolio from large cap names and the market volatility. I think other than that, Reliance has not given you any kind of a major returns over the near term. There have been phases where the stock has moved up 5%, 10%, but then that's how the markets have panned out. So there was a point where March 2025 we were at almost 22,000 on the Nifty. From there, we scaled up to 26,000. So it's almost like a 4,000 point jump. In that phase, Reliance did pretty well. But then, other than that, without the participation for in the overall markets as such, the stock has actually remained very, very listless. 1400 could be a zone where the stock has found good support, for itself for the near term. But then again, as I said, I think it's not a stock which is riding on the back of high momentum and doesn't give you any kind of a major trend on the upside, at least over the near term. So I think in that case, I would probably avoid.
Interesting. Let me also, Deepan, have your take with regard to the real estate pack. What's the take there? Because it's been a sector which has clocked the numbers, right? I mean, broadly, you've seen very strong pre-sales growth come through, which is what they've guided for. But it's not reflecting on stock prices yet. Stock prices have run up. Either they ran up way too early and now we've seen a bit of a cool off, or we haven't really seen the run up yet. What side of the fence do you sit on where realty is concerned?
So I think investors need to be a bit more patient in real estate companies, and I would prefer the larger ones, especially those which have got some annuity assets as well. The likes of Prestige and DLF do come to mind because they've got solid rental income as well. And in the case of DLF, the rental income is going to increase also gradually over time. So those are the companies try and prefer over there in the real estate space. But one small cap stock which comes to mind is WeWork, a recent listing, and exceptionally good numbers coming through from there. And if you want to play the shortage in the commercial premises segment in the real estate, that is a good way to play it. And the kind of expansion plans they have on their radar are quite phenomenal. Very decent numbers coming through for the December quarter as well. So we need to be selective in the real estate space. And as I said, broadly go for larger companies which have got rental assets. Also, at the same time, a lot of paper has come into real estate, and somewhere the other valuations also getting adjusted, considering kind of new listings which have come through in the past few months or so.
And Nagaraj, very quickly on charts, because what I'm trying to kind of get to is the Nifty Realty pack has fallen around 1.8% from the highs of the day. You've given up pretty much all of the gains. Anything on charts that's signaling that there is sustained weakness there? Because we're not seeing a bump up, and whenever we're seeing that bump up, it's been sold into.
Yeah, rightly said. Because if you look at the sector itself, from the 860 level has been continuously coming down, and overall chart pattern of the sector is not that conducive that one can say the whole host of the sector participants are moving up. There are some stocks outperforming the benchmark, the sectors, and most of the participants of the sector, I think they are underperforming at this point of time. There is one stock, Hemisphere Properties, has been sustaining at the higher levels, though not showing some sustainable up move, placed at the higher levels above 200-day EMA. Looks like we could see some bounce back, sharp breakout in the near term. For this stock, I think 150 is going to be the next resistance to be watched if the sector performs in the near term.
Okay, let's address ITC and on the sidelines of the NASSCOM Tech and Leadership Forum.
Where do you sit with regard to some of the tobacco stocks and ITC in particular? Of course, ITC with a much more diversified product portfolio than some of the other cigarette counters. But we've seen plenty of movement in this particular space as well. You have a view?
Yeah, we have a view, and it is an avoid.
Okay.
It's not a FMCG stock, it's a tobacco stock, and it's valued accordingly. And generates a lot of cash flow, tries to invest in various businesses, but apart from hotels, none of the businesses have reached scale. In fact, FMCG business is lagging a lot of its peer group companies as well. And on the whole, I think I don't see ITC growing at double-digit type of growth rates in the foreseeable future. So for us, ITC is a complete avoid. At this point of time, I think with the way we have seen the correction in the market, our focus is on small mid-cap stocks with exceptionally good business models, unique business models, where valuations now are at reasonable levels and not the kind of high-flying valuation which we saw earlier. So to us, I think slow growth, large cap companies are an avoid. And we may be wrong by 2-3 quarters or so, but I think small mid cap space is going to be the segment which will deliver good returns in 2027, and we need to be ahead of the curve over there.
Yeah, that's the take coming in on some of these tobacco manufacturers. But Kunal, on some of these solar energy themed names, which are seeing a crack today, but have been very steady, high HNI concentrated names, right? Like Avari, Premier Energies. You think declines like today are good opportunities to buy, or glutide opportunity is going to be big? And I guess that's what the markets are already pricing in. Remember, this could be a launch opportunity for several Indian manufacturers, considering Novo Nordisk's primary patent for semaglutide molecule expires in India during that month. And many companies are looking at, the GLP-1 opportunity, from a Zydus to an Alchem, DRL, Sun Pharma, Eris Life Sciences, Natco, which have also partnered to commercialize their own version in March 2026. And of course, this includes injectables as well as oral versions as well. Dipan, to your mind, how big and scalable could the GLP-1 opportunity be? And would it once again bring some of these pharma companies into the focus?
You're right, Asha. I think it's a good opportunity, but there are just too many players over there. So I don't know about the competitive pressure, how that particular molecule will play out. But on the whole, I think investors should be overweight pharma. I think export revenue should move up slightly high because of rupee depreciation. And now that we have a US free trade agreement with USA, the chances of pharmaceuticals also coming into the tariff that reduces significantly. So that uncertainty also is over and done with. And they go through their ups and downs, but if you see from point to point, a lot of pharma companies have delivered good wealth over time. So we prefer to be overweight the particular segment. We were very positive on CDMO companies, and this quarter has been particularly brutal, whether it's Cohance or Blue Jet or OneSource. But I think the stock prices also have corrected significantly over there, and they should be on every investor's watch list. Whenever there's a turnaround over there, and again, I think the revenues start to pick up, we may see good numbers and great returns coming in from the CDMO segment of the pharma industry.
Interesting. Kunal, let me come to you. Within the pharma pack, anything looking interesting?
Yeah, I think there are a few names which start to look attractive. Lupin is something which I think has been one of the better performers. Aurobindo Pharma, I think at 1200 levels, is trying to come out of a huge pattern of a consolidation. It's almost like a 10% or a 15% range for Aurobindo Pharma, and the stock looks attractive at current juncture. Biocon, I think, is making a fourth or the fifth attempt towards the 400 mark. So we'll wait out for a point when the stock confirms a breakout above 400 levels, and then probably try and look for this as a good buying opportunity. But yeah, I think the sector is looking a little bit more better than what it was maybe the previous month, or say start of the month of February, where most of the stocks were struggling. There are a few stocks on the large cap names which are still into a struggle mode for themselves. Cipla, I think, has been one of the few names which has been beaten down significantly, and the stock still trades below the long-term moving average. Sun Pharma is the other name. The stock is holding around that 1700, 1750 mark. Again, a stock which has struggled quite significantly in the last 3 months or so from those 1850, 1900 levels. So I think you have to be a little bit more selective as of now. But as I said, that the trend is evolving, volume patterns are improving, and the indicator shapes for many of these stocks are getting a little bit more better.
Interesting. Nagaraj, where is it that you're identifying any, if at all, a defensive pack, something that is a good safe haven in this market?
Yeah, I mean, in the pharma pack?
Pharma or any other sector?
Yeah, I think, but chartically, pharma is looking very positive. Mankind and Loris are the one which have showed some strength from the low levels. If you look at Loris Lab, has been in a constant up run, higher tops and bottoms on the chart. Today's upside breakout is indicating important turnaround for the stock price. I think 1140 is going to be the next resistance for the Loris. And Mankind is also showing some good momentum in today's session. More upside is likely from here onwards. I'm expecting these two pharma stocks.
Curious to know your view on Bharti Airtel. This investment that they have proposed to make, 20,000 crore, has led to some sustained weakness on the counter. 3% lower yesterday, today too. it's lower. How is it looking on charts?
Yes, Bharti is certainly looking weak, moved below the 200-day EMA. It has shown some bounce back recently from the lows. I think the bounce back has not sustained. And the last two sessions decline is indicating some faster retracement on the downside. I think more weakness is likely down to around 1840, 1845, which is the next support line could come in for the short term.
Which has just been unable to resurrect itself, has been eternal. It's now sub that 250 odd price point. And on a consistent basis, one has been seeing weakness on this one. Dipan, come in here. What's the big concern for the market? Because Eternal has been unable to resurrect itself ever since Dipinder Goyal's stepping down from the CEO position.
I think this pattern we are seeing in all the new age digital companies, and investors are losing patience with them when they will turn to profitability. How will they kind of sustain the large size capital base which they have? And this is really a lesson for investors that when they go for such companies, they have to have a very long horizon. We remain very positive on Eternal. It's a company in which we have invested in. Our clients are also invested in it. It's a part of our model portfolio as well. But we have a longer term view, so we are fine for the time being.
Okay. Okay. Dipan, also curious to have your view with regard to metals. I mean, we've just seen a one-way ride with regard to metal stocks. What next? I mean, do you feel that this kind of move is sustainable, and can we continue to see upsides from here?
See, it's a cyclical industry, and now it's like been a great outperformer for several quarters. So I would remain invested, but I'm not looking at getting in at these values, because at some point in time the cycle certainly will turn, and that may be a good opportunity then. But right now I don't see the outperformance continuing. Anyway, we have seen that the kind of zest out of gold and silver investment that has reduced, and eventually it will percolate to some of the other metals as well. And once we have more clarity on Trump tariffs and some of the other aspects, we may see cooling off of metal prices.
Okay, that's the take on metals. But for now, at least, they're going pretty strong. Today, of course, the standout theme has been some of the two-wheeler names. Both Hero MotoCorp and Bajaj Auto have spurred up quite nicely. And soon we will also be having the monthly sales data from Motown. But Nagraj, any specific observation with a Bajaj Auto or a Hero MotoCorp? Today's move is quite decent.
Yes, rightly said. After a downward correction, it has bounced back very well. Particularly for Hero Moto, moved up from near the support of 200-day EMA. The overall chart pattern is indicating more of a time correction rather than any severe price correction over the last 2-3 months price pattern. And I'm expecting this phase choppy trend is likely to be over very soon. And we could see these two stocks showing some momentum above the breakout.
Very quickly, what's the take on a Hero? That stock is perked up 4% in trade.
Yeah, but it's still one of the the mid performers from the auto pack two-wheelers. Bajaj Auto apparently is one of the better performers. So there's this very interesting shift which is happening from the entire auto pack. Earlier it was Hero MotoCorp, which was one of the better performers. Of course, Eicher Motors was the best performer from the pack, and Bajaj Auto was third. But I think now the move has changed a little bit. Bajaj Auto, I think, ranks up to be the second best performer from the auto pack.
Okay, we'll get Nagraj as well as Dipan to log off. Both of you, thank you so much as always for taking the time out and joining in. Kunal, I'll just come back to you as soon as we hit closing bell. But today has been a relatively flat